Hey everyone, I've received a lot of requests to discuss hospital related stocks. So today I would be covering the fundamentals of a small cap hospital company that recently got listed last year and growing rapidly. Company name is Yatharth Hospital. A small cap company with a market cap of 4,000 odd crore trading at a P ratio of around 42. Its IPO price was rupees 300 and today it is trading at around 450. Interestingly, this hospital chain intend to double its existing bed capacity in the next 3 years. So in this video, I would discuss business model, key moat, future growth, then financials, valuation, key risk to keep in mind before investing your money. And a quick disclaimer that this video is only for education purpose. If you are here for stock tips, then my videos won't be of any help. My motive is to discuss fundamentally strong companies along with their business detail. You need to take this forward and do your research to figure out the best stock for your own investment purpose. Alright, let's get started. Established in 2008, Yatharth Hospital is a private super specialty hospital chain with 3 hospitals in Delhi NCR region with a total capacity of around 1100 beds. However, company stepped out of Noida and in 2022, it acquired 305-bed hospital in Jhansi, taking its total bed count to 1400. And recently, company has acquired a new hospital in Faridabad that would add another 200 beds. Company has been established by the family of doctors Dr. Ajay Kumar Tyagi and Dr. Kapil Kumar. Each of them have over 18 years of experience in the medical profession. This hospital chain provides all level of healthcare service from primary to tertiary, and its service include your internal medicine, neuroscience, general surgery, oncology, pediatrics, gastroenterology, cardiology, and so on. Interestingly, in 2021, its internal medicine contributed 56% and that has now reduced to 31%, and remaining is diversified specialty services. So they have significantly increased their specialty treatment offering. This slide gives a good picture where they have 30 specialty and super specialty offering with 10 centers of excellence. You can see the increase in revenue for these COEs. Another important information you should know is the source of revenue for the hospital. So Yatharth Hospital generate revenue from 3 sources. First is self-payer, then you have insurance acting through third-party admin, and third is your state and central government under government scheme. In terms of revenue breakup, 37% comes from government, 27% from insurer, and 36% from self-payer. So that's the information on Yatharth Hospital. Now it's important to understand company's moat. So the key strength is that it's a leading super specialty hospital in Delhi NCR region. 2 of their Noida hospitals are among top 10 private hospitals in Delhi NCR region with advanced medical equipment and technology. So if a patient comes to the hospital for any basic health problem, let's say cough, cold, fever, and the person is diagnosed with a major health issue like cardiac problem, neuro problem, transplant, etc., that can be treated in the same hospital. All these super specialty hospitals have high pricing and hence they have a good ARPOB. So ARPOB is nothing but average room per occupied bed. High ARPOB directly has positive impact on hospital EBITDA and profits. Moreover, Delhi NCR region not only attract patients from the NCR region but also from neighboring state. Another strength is its solid team of experienced and qualified doctors with a very low attrition rate of below 10%. Moreover, this hospital chain is run by promoters who themselves are doctors. Its chairman is Dr. Ajay Kumar Tyagi. He holds a degree of Bachelor of Medicine and Bachelor of Surgery from LLRM Medical College, Meerut University. He also holds Diploma in Orthopedics from King's George Medical College, Lucknow. Then Dr. Kapil Kumar is the MD of the company. He holds a degree of Bachelor of Medicine and Bachelor of Surgery from SN Medical College, Agra University. Further, he holds a degree of Master of Surgery in Orthopedic Surgery from Lucknow University. Mr. Yatharth Tyagi, son of Dr. Ajay Tyagi, is the director of the company and responsible for overall operation and business development. He holds a bachelor degree in business and management from Leeds Beckett University and Master of Science degree in international health management from Imperial College London. You can access the leadership detail on company's website. And final strength of the company is its financial strength. Company has a solid financial track record with high growth and profitability. In last 6-7 years, company's revenues have grown at a very high rate from 70 odd crore to 636 crore. It has consistently maintained a high operating margin. In fact, Yatharth has one of the best EBITDA in the industry. And its PAT has jumped from single digit all the way to 90 odd crore. That's exponential growth. Company is consistently generating good cash from operation, has a very high ROE of 44% and ROC of 26.6%. And the best part is, it is completely debt-free company. I hope you got a fair idea on company's strength. Before we proceed, if you find my analysis useful and want to associate with me closely, then you can explore my weekly video series that include one exclusive video where I discuss key events in the economy and identify top stocks along with stocks where I am myself investing my money. So that can help you build that additional conviction. Having said this, this series is only for long-term fundamental investor. By the way, I also track more than 200 quarterly results and share the details over Excel. There are also stock names as per various themes. Now that we are already in Q4 result season, I'll update the Excel sheet. For more details, you can visit my website or check the join button. Now let us try to understand the growth drivers for the company and its plan to capitalize on the opportunity. If you look at the bigger picture, we are a country with 140 plus crore people with rising income and spending level. And today people want the best of healthcare services. However, there's still a lack of proper infrastructure, with India having a very low bed density in the world with just 15 bed per 10,000 people. US has almost double the bed capacity and China is triple. Even Malaysia and Brazil have much higher bed capacity as compared to India. On top of this, there are rising cases of lifestyle related cases that has resulted in high bed occupancy for good hospitals. And thanks to growing awareness and adoption of health insurance, today people don't hesitate in spending money on treatment from good hospital. Even the Indian government has a national public health insurance scheme called Ayushman Bharat that provides 5 lakh rupee of healthcare coverage that cover more than 10 crore Indian family from lower strata of society. Due to all these factors, Indian hospital sector is expected to grow in double-digit rate from 5 trillion rupee in FY22 to 8.6 trillion by FY27. Within this, private hospitals that contributed 3.2 trillion rupee in FY22 are expected to reach 6.3 trillion, which is an increase from 65% contribution to 73%. So growth potential in the private hospital segment is massive. Now the question is, what is the growth plan of Yatharth Hospital to capture the opportunities? So first of all, Yatharth Hospital is growing its presence by both organic and inorganic way. For instance, it had 3 hospitals in Delhi NCR region. Then in 2022, it acquired a 305-bed hospital in Jhansi. And recently, company has acquired a new hospital in Faridabad that would add another 200 bed. So today, company total bed capacity is at 1400, which is expected to grow to 2800 bed by FY27. Company management has mentioned that over the next 2-3 years, there will be at least one acquisition every year. Moreover, they are also increasing the bed capacity in their existing facility and planning to add 450 bed in the next 3 years. So overall, they plan to double their bed capacity in the next 3 years, and that should give you a good idea of their growth plan. Basically, they did their IPO last year when they raised around 680 odd crores, out of which 490 odd crore was fresh issue for repayment of borrowing and funding the capex plan. Company is already sitting on cash worth 320 crore rupees as of September 23. Apart from this, they are also improving their mix towards high-value specialty services like neurology, cardiology, oncology, and so on. They've recently unveiled a state-of-art cancer and radiation oncology center. They've recently introduced robotic surgery. So all these developments would improve companies' ARPOB and profitability. Then in the long term, there's a massive opportunity in the medical tourism in India to attract international patients. There's an upcoming airport in Noida, which is one of the largest airports in Asia. So going forward, company would leverage the medical tourism opportunity as well. As of Q3 of FY24, they have 52% average occupancy rate and average rate per occupied bed is at 29,300 rupee. So this image shows the occupancy rate where Noida Hospital has very high occupancy of 90%. Then Jhansi Hospital occupancy is low that they acquired in 2022. Going forward, management expect the occupancy to improve there. I hope you got a fair idea about the growth potential in this space and Yatharth plan to capture the opportunity. Now, before we close the video, let us look at the key risks in company's growth thesis. So first key risk is regulatory risk. Currently, private hospitals are free to decide the charges on various medical procedures, and the rate of private hospitals are much higher than public hospital. However, recently Supreme Court has ordered the Indian government to fix hospital treatment charges and make it same for both public and private hospital. Although the likelihood of this event to happen is very low, mainly because if private hospital have to reduce the rate to level of public hospital, then it would not be possible to maintain quality healthcare. I think it would completely destroy the private hospital network of India, because in that case, hospitals won't be able to afford high quality doctors and services. So the probability of applying these kind of laws is very low in my opinion, but still this creates regulatory risk around the hospital sector. Second risk is attrition risk. For a hospital, the biggest assets are their doctors, and there is always a risk of high attrition among doctors in hospital sector. And third risk is competition risk. Although there is a high demand for good quality healthcare due to low availability of beds, there is always a risk of competition. There are many established hospital chains like Apollo, Max Healthcare, Global Health, then Fortis and so on. Plus, there are many small to medium private hospitals in India. Having said this, if you look at the listed hospital peers, Apollo Hospital commands a market cap of around 92,000 crore with PE of 116. Max Healthcare market cap is 78,000 crore with PE of 74. Global Health market cap is 36,000 crore with PE of 81. Fortis market cap is 33,000 crore with PE of 61. Narayan Rudhyalaya is 26,000 crore with PE of 34. By the way, I also like Narayan Rudhyalaya in the mid-cap segment. Compared to them, Yatharth is around 4,000 odd crore with PE of 41. So valuations are quite reasonable as compared to peers. Now, if you look at company's shareholding pattern, its promoter holds 66.4% stake. They have slightly increased their stake in December quarter. Then FIs have 2.6% stake that they have slightly reduced. DIs have 8.8% stake and public has 22% stake that they have increased from September quarter. It also includes few institutions like Plutus Wealth Management, Think India Opportunity. So in this video, we discuss the fundamentals of Yatharth Hospital, that is a private super specialty hospital chain with around 1400 bed and planning to make it 2800 in the next 3 years. It got listed last year and trading at a market cap of around 4,000 odd crore with a PE of 42. Valuation wise, it is at better levels as compared to other listed peers. As far as future is concerned, Indian hospital sector is bound to do well as we still have very low availability of just 15 beds per 10,000 people in India. Moreover, there are increasing cases of lifestyle related problem and due to rising income level, people would prefer good private hospital. Moreover, there is a lot of scope for medical tourism in India in the future. Yatharth Hospital is well placed to benefit from these growth drivers. Having said this, please keep in mind the key risks that I have discussed before you invest your money. Especially that regulation risk is worth keeping a close eye. Now tell me in the comments, what do you think about the future of hospital stocks in India? Have you invested in any of the hospital companies? And what do you think about Yatharth Hospital? If you find this analysis useful, do share it with your friends. And if you are looking for more such well-researched content, then subscribe to this channel and click on the bell icon. I'll see you next video. Till then, take care.